morning, ladies and gentlemen. We continue with our coverage of first quarter earnings. Companies that have declared good numbers in this overall environment of gloom and doom. That's Transport Corporation of India Ltd, where first quarter earnings have increased 17% to 107 crore rupees in the quarter gone by versus 91.6 crores a year earlier. Sales have improved 9% to 1139 crores versus 1045 crores in the year ago period. We are now joined by Mr. Vineet Agarwal at Transport Corporation of India, and we'll discuss the set of earnings as far as markets are concerned. The stock, ladies and gentlemen, is close to a record high, one of those quiet overperformers where quietly over a long period of time you've seen extreme outperformance. Mr. Vineet Agarwal, Managing Director at TCI, joins us. Namaste to you, Mr. Agarwal, and a very warm welcome in this time where there is gloom and doom as far as corporate earnings are concerned. You've come up with a very good performance. What prompted this 17% rise in net profit?
Hi, Shailendra. Always good to be back. The quarter gone by has been interesting. One is that from a perspective of what's happening in the economy, I think we are aware of there is a bit of lull that is there. The industrial sector is a bit weak. There is also though they have order books, it's just that the flow is not there. As well as the summer has been weak, so that has affected consumer durables, consumer FMCG. But some areas, some pockets of good growth are being seen. For example, the agri sector, where we are seeing inputs also increasing, the demand for inputs increasing, tractors and so on and so forth. But in reality, I think there is a certain amount of weakness that is there. Consumer sentiments are soft. So the area that did well for us was our shipping business that grew reasonably well, and we were able to get better profits out of that division. We had a number of extra voyages that happened in that business, so that helped. And international freight rates have been stable, a little bit on the higher side, which meant some capacity moved away from India overseas, and hence the freight rates in India also improved. Fuel prices, that is the bunker prices in the shipping business, also were on the lower side, so that helped the growth of that business. So overall, I would say a very mixed quarter. And we were anticipating this to be that soft, but going forward, I think we will see definitely some more changes.
Okay. Since both of us are from North India, sitting in Delhi, I think for consumer good companies like air conditioner makers, fridge makers, this quarter has been a wipeout because we don't see summer with that intensity in North India this time. Rains are also pretty good. What is now the level of stocking that's happening ahead of the festival year? Any positive changes that you are able to track down compared with last year in your set of clients who are shipping to now distributors to consumers?
Yes, so interestingly, I think there are some segments where the stocking has been quite robust. Now, for example, the auto sector. Now, just to talk to you a little bit about that is that sometimes you worry if the stocking is too much, because then it could also mean that, oh, is there an overproduction and hence there is stocking, or is it just stocking in anticipation of the festival season? So we are seeing a huge amount of massive inventory buildup in the auto sector currently as we speak. However, on the other sides, which is more on the consumer side, whether it is textiles or home furnishings or things related to what people will typically buy during the festival season, I think that is at the same level as last year. It's not something unusual, either on the lower side or on the higher side. But as I said a little earlier, sentiment is still a little weak. Monsoon is good, so I think the expectation that rural economy will do well is high. But on the consumer side, on the on the urban areas, I think that sentiment still remains soft.
Okay. Any geographies, any verticals that stood out on your examination in the first quarter? Any sector apart from auto that might have caught your attention?
Well, certainly, related to the auto sector, is the tractors sector has done reasonably well. I think that
Okay.
picked up quite well, including, as I said, agri inputs, so fertilizer or seeds and related equipment on the agri side. Even some of the finished products on the food side, which is directly connected to the agri, has also done reasonably well.
Okay. So, auto, in particular, farm is looking good as far as the movement from factories towards distributors is concerned. Any fresh additions in capacity, Mr. Agarwal, in terms of fleet or ships or any new warehouses that you may have set up in the quarter gone by, and maybe the plan for the next 9 months or so?
So the plan for the full year is a 450 crore capex plan, which includes addition of ships, so which is not really addition that will in terms which will come in terms of capacity this year, but this is advances for the build that we've ordered to come sometime in FY27. However, there will be some monies that has to be transferred for the advances, so that capex will happen. There's capex that we have planned about 100 odd crores for trucks and about 100 odd crores, 125 crores for warehouses, etc., as well as some IT equipment as well as warehouse equipment. I think all of those are part of the 450 crore plan, out of which we spent about 60 odd crores in the first quarter. And typically, first quarter is a little, it starts picking up over the full year in terms of the plan. And in the quarter gone by, we've commissioned a few warehouses. We've added 50 odd trucks, but no capacity addition when it comes to any ships, etc.
Okay, fair point. OPM remains constant at 11%. This is something that you can easily maintain for the coming 9 quarters, or do we see an uptick?
No, certainly the next 9 months, we do expect it to be in line with the guidance of 10 to 15% on the top line and about a similar kind on the bottom line. So this will anticipation for us is that there are some businesses that are doing well. Some businesses tend to mirror GDP growth, and hence there is some amount of it's a little weaker. But others are picking up. Cold chain, for example, or supply chain business or the rail business. So all of that should definitely help in terms of the guidance that we've planned for the year.
Okay. Uh, Borrowings are somewhere in the vicinity of 220 crores to 240 crores, mostly for working capital requirement. You're very comfortable with
So
them?
it's not that much. I think it's about 125 odd crores. I think is mostly for some kind of capex like trucks, etc. We do have more than 275 crores of cash on our books,
Yes.
and we have, so this is a very limited amount of debt we have, because that financing of these kind of assets is actually cheaper when it comes to debt versus putting equity. So it's reasonable in terms of debt structure.
Mr. Agarwal, Transport Corporation would be the first, how should I say, fast indicator to find out how global supply chains and this tariffs issue that we are facing with the US, or the US is facing with many other countries, and India might be a part of that supply chain. How is your interpretation? What is the pulse that you get when you hear this global war happening? Are you able to move overseas imports into India comfortably, or are you seeing some kind of an issue there as well?
We are less challenger into the exim business. However, the sentiments that we are seeing on the ground is very uncertain. There's a very high degree of uncertainty because of the tariff, whether it is going to come or whether it's not going to come. I think it is starting to affect production of several companies, where they are thinking that, okay, do I produce for the export market or not? Do I focus on the domestic market? So definitely there are this kind of uncertainty on the tariff side playing out. there is no real embargo or any kind of impediments to trade in terms of import or export per se from a logistics perspective. It is mostly from a perspective of whether this is going to be something that we want to do or not. So the investment plans for several companies are perhaps on hold. I think the private capex that we see is weak because of some of this uncertainty as well. So let's see how this plays out. I think we have a few more weeks before we can definitely see a result.
Okay. Mr. Agarwal, I was diving deep into the growth potential, the growth part where growth came in as far as sales is concerned. And I see supply chain solutions division showing a 22% growth year on year on its revenue. It's also one of the top performers, contributors when it comes to the profit before tax. What's changing for the better as far as supply chain solutions business is concerned?
One interesting development that has started to happen is warehousing. I think we are seeing a good traction
Right.
there. We've had reasonable growth in that space, and we are seeing. Last time we talked about quick commerce, so we are seeing some
Yes,
quick
yes.
commerce growth also coming around. Some of the larger companies are also wanting to outsource to more organized companies like us when it comes to large warehouses, because when we start looking at uh, the big warehouses, the big CNFs, the complexity changes quite a lot. You're talking about huge amount of inventory, huge amount of throughput, massive amount of people, whether it is labor, workforce, or other white collar workers and blue collar workers. So that requires, to manage that scale and complexity, you need people who have that experience and who have the knowledge to do it. And we're also working on automation in many of these places. So all of those factors mean that you have to make an investment, which not many people are willing to do right away. Hence, the kind of opportunity for us. We are seeing good growth there. Quick commerce is a business and an area that is seeing rapid escalation, whether it is setting up new warehouses in different parts of the country to service those dark stores. We do that only, as you know, only the fulfillment element. We don't do the last mile. So fulfillment element is increased quite a lot also in the last few months.
Okay. Mr. Agarwal, the first 5 months of uh, financial year FY26 have lapsed. How do you feel when you see your business? The reason why I ask you this is, as I have said, you are the early indicator for the rest of corporate India. If goods are moving fast apace, it essentially means that the pulse is good. But what's your gut feel about FY25 so far?
So
FY26 so far?
4 months have passed, and in the 4 months, yes, what we are seeing is that there is weakness, and this weakness is going to continue for the next quarter. Q2 is also going to be, we believe, and I'm not going by gut feel, but by data actually, that it is looking soft, and it will start picking up perhaps post the festival season. I think credit flow, once these interest rates have started to come down, is going to increase. People are going to start looking at capex. Hopefully, the tariff structures are well known. Some of these FTAs will start coming into place. So, let's say by the closer to the end of the calendar year, you'll see more growth coming up for sure. So, yes, overall for the year, we are still cautious, but we would maintain our guidance of 10 to 15%.
Would you want to comment on the rare earth metals issue, especially for two-wheelers? One of your customers said that they are looking for a 0 month. Are you seeing that reflected in volumes?
Well, what typically happens is that, and perhaps some of that overproduction or that I talked about in the auto space is because of this concern that, let me produce what is available today and keep it ready. If, God forbid, we have to do a shutdown later on. So some of that could be playing around in today's scenario as well. And yes, it is a critical factor. I think it is something that every company in the auto space is very, very uh, cautious about. There will be some businesses that will be okay still, but we know that some businesses can get dramatically affected.
On that note, on a very somber note, Mr. Agarwal, we'll call it a day. But as always, it's such a pleasure talking to you because you control the entire movement of corporate India from factories to warehouses to distributors to consumers and the reverse as well. Thank you for your time, and we'll close this show with the stock price, ladies and gentlemen, of Transport Corporation of India. It's been a quiet overperformer. Not many people know about the kind of wealth that has been created for shareholders. What you see is a stock price near its all-time high for the last 5 years. Each year, the CAGR, hold your breath, is 46%. Each year, the stock has given a return of 46%. It has been next to impossible to beat the small cap index by any fund manager, but TCI has beaten it by a margin of 1400 basis points. The BSE small cap index has appreciated 33% each year. If you come to the 3-year period, each year TCI has gone up by 20%, and over the last decade, each year Mr. Agarwal and his team have created a wealth of 20% CAGR for their shareholders. Thank you, Mr. Agarwal, and here's wishing you all the best.